Do you know that the price in each time frame does not have the ability to move more than a certain amount? Perhaps it would be interesting for you to know that certain candlesticks have important regions that reverse the price. How can we identify the ability of price movement and incorporate it into our analyses to have more accurate and precise results? Take a look at the image. Which size of candlesticks is more visible on the chart? Pay attention to the candlesticks I have highlighted. Most candlesticks on the chart move to this extent, and if a candlestick has a longer length, this excess length is compensated for by smaller candlesticks in the middle. Everything tends to reach a balance. In this video, we cover the following: identifying a measurement for calculating the ability to move, applications of this measurement, categorizing candlesticks based on it. This episode forms the foundation of the behavioral of price movement style. Please pay close attention to this episode so that in the future, you can analyze the chart using this style. Before we begin, please subscribe to our channel and enable notifications to stay updated on our videos. Also, hit the like button to support us in creating more videos. See you after the disclaimer and intro. Welcome back, traders. So let's get started. Every index, commodity, and everything has potential and capability. This capability can create a mindset for us. You never expect a bicycle to move at 150 kilometers per hour. The inherent capability and power in a bicycle give us the mindset to balance our expectations regarding the bicycle. This also applies to the prices. For example, when talking about the GBP-USD pair, there is a movement capability that shapes our mindset. We never expect the GBP-USD pair to move 100 pips in 15 minutes. Please pay attention to the GBP-USD pair chart in the 1-minute time frame. In this time frame, each 15-minute candle is equivalent to 15 1-minute candles, as evident. The movement capability of each 15-minute candle is approximately 3 to 6 pips. To have a mindset, we need a tool that can determine a measurement for us. This measurement is the average true range ATR indicator. The ATR indicator is a measure of market volatility that shows how much the price of an asset changes over a specified period of time. We should use the ATR indicator with a period of 24 in all time frames. The image shows how to calculate the true range of each candle. The average true range, ATR indicator, calculates the average true range over a specified time period. We use this measurement as a potential for price movement, or the ability of each currency to fluctuate within that specific time frame. When you have movement potential and essentially balance, you can expect the price to always move around its equilibrium. So, if the price makes sharp movements with momentum over several candles, it is likely to consolidate afterwards, and this consolidation is not like an Elliott correction. Consolidation can be corrective or sideways, or it can be in line with the previous momentum movement, albeit with a lower slope and the length of candle movements that will bring the market back to its equilibrium. How to add the ATR to your charts on MetaTrader. You can find this indicator in MetaTrader in the Insert tab under the Oscillators section. Set its period to 24. How to add the ATR to your charts on TradingView. Additionally, in TradingView, you can search for the ATR indicator in the Indicators section at the top of the page. To change the period, click on the indicator's settings and adjust the period. Please note that we choose the SMA mode for smoothing. Consider the chart which pertains to gold. This chart is for a 4-hour time frame. We can use the average true range, ATR indicator, with a period of 24 on all time frames. This asset on the 4-hour time frame has an average true range of 17, meaning it can have this level of fluctuation in a standard 4-hour period. However, we can consider a variance of 20%, which means the price movement over a 4-hour period should typically range from 80% to 120% of the ATR. Therefore, the length of the candles can be between 13 and 20. As a result, standard 4-hour candles should fluctuate by 13 to 20 pips. This value is unrelated to the color of the candle body. In other words, gold in the 4-hour time frame has the ability to move between 13 and 20 pips, which can be either a decrease or an increase in price. What happens if the price moves more than this standard range? Typically, after a few more candles, it is likely that the price will not sustain significant fluctuations and will start to correct its movement. After larger candles, we often expect to see smaller candles as nature tends towards equilibrium, and price action is no exception. Following large candles, price tends to correct the volatility, either in the direction of the previous trend, against the previous trend, or sideways. The next question is, what happens if the price moves less than this standard range? If the price moves with smaller candles, we would expect the next candles to have greater lengths to bring the price back to equilibrium, in contrast to the previous scenario. Now, consider a scenario where we calculate the average true range ATR for price with different periods in a specific time frame. For example, let's calculate this value with periods of 5 and 24 in a 1-hour time frame. If the ATR with a period of 5 is less than the ATR with a period of 24, it indicates that the price has recently experienced lower volatility and will likely make up for this lag in the next few candles. Conversely, we can also consider these conditions in reverse, where in this case, the price is less likely to have significant fluctuations in the next few candles. Therefore, the first benefit of this indicator for us is that by comparing two time periods of ATR, we can conclude that if the ATR of the smaller period is greater than the ATR of the larger period, it will likely take longer to reach the target with trading in these areas. On the other hand, if the ATR of the smaller period is less than the ATR with the larger period, we can expect the price to move with good momentum, possibly reaching the target in less time. The ATR indicator in the behavioral of price movement style will have numerous applications which we will discuss in detail. This was just an introduction to its applications. Categorizing candles based on length. In the future, based on this categorization, we will find suitable trading areas within the candles. Setting stop loss and targets. Based on the expectations we have for price movements in each time frame, we consider logical stop loss and targets for our trades. Determining price movement steps. Price movement steps are essentially levels with equal distances from each other that price moves based on, and we can identify important support and resistance areas in the future market using these steps. These levels are where the price needs to rest when it reaches them on its own time frame. However, whether these levels are broken or not should be examined in the future in those areas. Analyzing relationships between different time frames. A TR of different time frames have interesting relationships with each other that we will explain later. Determining time frame for all levels. Based on ATR of different time frames, we consider a specific time frame for all levels to understand the importance and strength of levels relative to each other. Correctly identifying price reversals or breakouts. After considering specific levels for all levels inside the chart time frame, we examine the level break in the same time frame to avoid false breaks. Also, we analyze the return from the level in the same time frame, which increases the accuracy of our analysis and trading. In general, we can say that this measurement forms the basis of our analyses, which will be clearly explained in the future. Before continuing the discussion, please write in the comments which of the mentioned applications you would like us to explain in the first place. To prevent the video from being too long, we will only explain the first application of this indicator, which is categorizing candles based on it. Candles are divided into 4 categories based on length. Spinning candle. If the length of the candle is less than 80% of the ATR, it is considered a spinning candle. Spinning candles usually form during market rest times when the price has little energy for movement. Standard candle. If the length of the candle is between 80% to 120% of the ATR, it is a standard candle. Long candle. If the length of the candle is between 120% to 250% of the ATR, it is a long candle. Spike candle. If the length of the candle is more than 250% of the ATR, it is a spike candle. The type of candles can also be observed accurately on the chart. Standard candles, which are the most common. Spinning candles are smaller than the standard candles. Long candles are longer than the standard candles, and spike candles are the largest in size. Each category of candles has its applications. For instance, in discussing inside bar patterns, if the inside bar is a spinning type and the mother bar is standard or larger, it forms a better pattern for trading. Inside spike candles typically have three distinct areas, and some long bar candles have one important area for trading. Standard candles also have essential zones. Detailed explanations about these critical zones will be provided in the future. Well, guys, this episode has come to an end. Please press the like button to support us and leave your comments. If you're new here, subscribe to our channel and hit the bell icon to stay updated on future videos. We have prepared more setups for you.